Today we are going to learn about failed liquidity engineering. Failed liquidity engineering. And now in failed liquidity engineering, yesterday we learned about liquidity engineering where the market breaks the structure and change the character. So we mark this entry point here as our entry, but you can find that now the market doesn't respect this entry and breaks the stop loss. Now, how do we act on these situations? How do we act in this situation? Now, if you find this scenario in the market, this is what we call failed liquidity engineering, or sometimes people call it failed overflow. Failed overflow. Or sometimes people call it flip. So all these names are the same thing, the same thing. So now in the failed liquidity engineering, it's simply the liquidity engineer that failed to respect the supposed movement. For example, when the price breaks and change character, we are supposed to enter in this point here, but we find now the market breaks this point. Now, this is what we call failed liquidity engineering. So, same applies from the liquidity engineering. We have types of failed liquidity engineering, same as liquidity engineering. The first type is what we call simple failed liquidity engineering. And the second type, we call it compressive failed liquidity engineering. And the third one is what we call simple compressive liquidity engineering. Now, in the simple liquidity engineering, in the simple failed liquidity engineering, the market performs an action where it breaks the structure and then changes the character and then breaks above. So we were supposed to enter at this point here as liquidity engineering. But now, since it is the failed liquidity engineering, we are going to enter it as flip. So the same point where we were supposed to enter as liquidity engineering is where we are going to enter as flip. Do you understand there?
Yes, sir.
So same applies in a bullish movement where the market we were supposed to the market breaks below and then change the character. We were supposed to enter here as liquidity engineer, but the market breaks below. So what are we going to do here? We were supposed to enter at this point as liquidity engineering. Now we are going to enter at this point as failed liquidity engineering. Same applies in a compressive liquidity engineering. The market, we learned yesterday that in a compressive liquidity engineering, the market creates a small trend before making the low, then come to break this point here. Then after that, the market changed the character. So we are supposed to enter at this point as liquidity engineering, but the market breaks above. So now what are we going to do here? Same applies in the liquidity engineering. The same entry that we are supposed to enter as liquidity engineering, now we are going to enter it as failed liquidity engineering. Same applies in a bullish market where the market was supposed to perform the small trend here before this low, then the market break the structure here, then change the character. We were supposed to enter here as our compressive liquidity engineering, but the market breaks. So from there now, the same position where we are supposed to enter as liquidity engineering, now we are going to enter as a failed liquidity engineering. So in the compressive, simple compressive is where the market creates a high, then a low, then before coming to break this point here, to make a break of structure, the market performs a small trend, then breaks the structure. Then after that, the market changed the character below. So we are supposed to enter here as our liquidity engineering. Now the market breaks above. So after the market breaks there, we were supposed to enter here as our liquidity engineering. Now we are going to enter as a failed liquidity engineering. Same applies in a bullish market structure where the market creates a low, then a high. Before coming to break this point here, the market creates a small trend, then breaks the structure, then change the character. So we are supposed to enter here as our liquidity engineering, but the market breaks below. Sorry. So the market breaks below here. So after that, now we were supposed to enter here as our liquidity engineering. So now we are going to enter it as a failed liquidity engineering. So these are the types of failed liquidity engineering. If you can screenshot there, it will be helpful. Okay.
Yes, I've taken.
Now, there are rules on how to enter failed liquidity engineering. So yesterday we learned about liquidity engineering, and we sort out the characteristics. I'm sorry. I'm sorry, someone called me.
Okay, sir.
So in failed liquidity engineering, the only rule that you have to abide with is that this is our break of structure here and the change of character. So the market, let me draw here properly so that you can understand. So the market breaks the structure, then change the character, then the market failed to respect this liquidity engineering here. The only way you can enter this failed liquidity engineering is by when the market close this point here. So this point here is what we call reclaim point. Reclaim point. Now, why do we call it reclaim point here? Because if the market came here and breaks only by wick, it means still the sellers who enter here in this liquidity engineering, still they have strength to turn up the market. The only way we can be assured that this liquidity engineering is the failed liquidity engineering is by when the market close this point by body. When we see the body came here and closed by this recurring point here by body.
Okay, sir. Okay.
So even in this situation here, the only way we can enter here is when the market close here by body, or here by body, or in this point here by body, or in this point here by body, this reclaim point here. Also here, when the market close here by body is when now we can consider this point as entry, or here when the market close here by body is when we can consider this point here as our entry point. So you have to make sure that if the market just swipe by the wick, now you cannot enter that failed liquidity engineering, because there is high possibility the market can ship. So let us look some few examples. Examples so that we can understand this topic clearly. So the first example here is this one here. As you can see, the market created this low, then high, then break the structure here. Then the market come and change the character. So we were supposed to enter this point here as our liquidity engineering. But look now, the market came and break this reclaim point here by body. So after the market came and break this point here by body, see how the market now act. The market came here and enter this liquidity engineer as failed liquidity engineering.
Okay.
You see this? So the only way we entered this point here is when the market now came and break this by this body. This candle here closed by the body. Now we were assured now how we can enter here. We can put here our entries. Another example I saw, it was this point here. Look closely, and sometimes the market can do something like this. This is the very, very nice example to show. The market breaks the structure here, then change the character here, as you can see. So this was
Yes,
our
sir.
this was our liquidity engineering. Now the market performed the rounded retest, then it came here, but it failed to respect this liquidity engineering. So the market came and break this decline point by body. Now we were assured now
Yes, sir.
that this point is a failed liquidity engineering. Now look closely how the market came
Yes.
and check the entry at this point. Then the market went low.
Yeah. Yeah.
So another example, as you can see here, this is another example here. The market break the structure above, then change the character. So you can find the scenario like this, where the market take the liquidity engineering and actually went until to the take profit. But now the market came back again and closed above the decline point there. Soon after the market closed,
Yes,
soon after the market closed the decline point, the market did the micro retest and take the entry as the failed liquidity engineering. Then the market went long.
it goes up. Yeah. Yes.
It was clear entry there. So another example, this was the liquidity engineering. Okay, let me use another pair here. Let's test this.
Okay.
So this was another entry here. As you can see, this was our liquidity engineering here. The market actually, it took this liquidity engineering and went to the take profit. But now the market came back and closed above this decline point by the huge momentum candle here. Now look closely. After the market came and closed this point, the market came back to the liquidity engineering and took another entry, then went long.
Yes, sir.
So I have some few examples I screenshot myself. These are the entries I took myself using this liquidity engineering flip. So this was my first entry. I don't know if you can see them clearly.
Yes, I can able to see.
So this was my first entry. So I took, this was the liquidity engineering here, as you can see. The market breaks below, then change the character, but the market came back and closed below this decline point. So the market came and performed a micro retest there. So the second example, as you can see here, this was a liquidity engineering. The market came and closed above this decline point here by these two candles here. After the market came and closed, market just came and performed micro retest, then the market went long.
It goes up. Yeah.
Another one here. a liquidity engineering. Market came and closed below the liquidity point. Then market come and take the flip. Then the market go down. Actually, I will send you this PDF for more review.
So once again, sir, go for the previous one.
The stop loss.
No, sir, previous chart. I mean previous chart.
Oh, here.
Okay. Here I can able to see that the market was still, it was not breaking the kind of structure here. It is okay that we can use this as a
Liquidity engineering.
failed liquid engineering or liquid engineering. Yeah.
That's a very, very good question. Let me explain here. As you can remember closely, in the first topic, I said you can find we only use wick to body breakout. Is it? So now I said,
Yes,
as
sir.
if you remember closely, I said we only use body to body or wick to wick breakout only from 5 minutes to lower time frame. If you find a liquidity engineering or a break of structure or a change of character that has just changed by body or by just weeks in a smaller time frame from 5 minutes to the lower time frame, that you can take it as a break of structure or a change of character. So if you look in this chart here, look above here, this was the 5 minutes chart. So because it is the 5 minutes chart, I can consider this as a break of structure.
Break of structure. Okay.
Do you understand there?
Okay, sir.
Yeah.
I got it.
Yeah. It was it's a very good question there you asked. So another example, this was gold. This was a compressive liquidity engineering, as you can say. Now, the market did not perform it, did not respect this. The market came and closed below this decline point. Now look how the market came and take the entry, the short entry here at the same point when the market was supposed to take as liquidity engineering.
Yes, sir.
Another example, actually this was the liquidity engineering here, as you can see. The market came actually and take some few pips, but it didn't manage to go above the take profit there. And remember, our take profit always is the turning point. The market, the turning point, the point where the market turns towards the entry point is where we mark our take profits. And actually, I'm gonna teach you the issue of taking the profits and risk management. I think in the topic of directional bias. So as you can see, this was the liquidity engineering. The market failed to manage, then came to close below this decline point by these candles here. So the market came back and take the entry there at the same point, then the market went short. This is another example here. As you can see, the market came and break the structure, then changed the character, Now, the market was
Yes, sir.
supposed to take the entry here as liquidity engineering, but it failed. It closed above the reclaim point.
Yes,
So after the market failed,
yes, sir.
it came back, take the entry, then went above.
Going up. Yes, sir.
We have a lot of example. Another example here. As you can see, the market breaks above, then change the character. And actually, it took some entry, some few pips of liquidity engineering and went down, but it failed to manage. Then the market came back and closed above this reclaim point. And as you can see, this candle came and tapped and went. I think this was a news candle here. I think,
Okay.
yeah. Okay,
Okay.
another one. This was another example. As you can see, the market was supposed to come here and take as liquidity engineering, but it failed. Closed above. The market came back, tested, then, and actually it tested
So here we should place it here, no, this one.
this point here.
Yeah,
Oh, this one was
yeah.
supposed to be the compressive, yeah? I think
Yes, sir.
Since this market we cannot reverse it, this was a screenshot. We could see how the market acted there, but this was the screenshot. But I think you got the point there.
Yes, sir. Yeah.
Another one here, and liquidity engineering. Market failed. Then the market came back, take the entry, then went above.
Okay. Okay.
Another example, I think this was not supposed to be a liquidity engineering actually. This is another entry type. I think this we can skip this.
Okay.
Okay, this is another example. As you can see here, a small break of structure, then change of character, then the market performed a very long rounded retest, but failed to manage this liquidity engineering, closed below, market came back, tested, then went down. Another example here, liquidity engineering, market failed, broke the liquidity point, then the market came back to the same point, tapped, then went down. And so on and so on. Another example here, I think this was not supposed to be a liquidity engineering because of some few reasons that I'm going to teach you. I'm going to teach you.
Okay. Okay.
So as you can tell, this was a small break of structure above. Then the price changed the character, then break the liquidity point. The market came back to that liquidity engineering. Then the market went long. And the last example, as you can tell, the break of structure here, change of character, break below,
yeah,
then came back, as you can see.
yes, sir.
So that is a failed liquidity engineering.
Okay, sir.
So you can go to the market, try to find some examples as normal, 5 examples for simple, 5 examples for compressive, and 5 examples for simple compressive. I know liquidity, failed liquidity engineering is very hard to find, but You just try, even if it's hard, you just try to
Okay,
find
okay,
them, and you send me. And
okay,
so we will meet on Monday, and actually on Monday we are going to
okay, sir.
learn. We are going to learn about what?
And now
We're going to learn candlestick anatomy.
yes, sir.
And actually, before
Okay,
before candlestick anatomy and camouflage, I think I'm gonna teach you first formation. I forgot to put the topic of formation here in this course outline. So on Monday we're going to learn about formations, and actually I need you to keep on mind this. The only entries that we have in this program is the entry type. We use formation, and we use camouflage, and we use candlestick anatomy. These are the only entry type that we use. In the further topics, you can see we are not going to use liquidity engineering or failed liquidity engineering. We are not going to use those again. We just teach you so that you can use it when it is necessary to use it. But the only entry modules that we are going to use at this point. Now, these entry modules this year, these are the best, and they have raw risk. As you can see in my Instagram account, you can see a lot of entries that I've sniped and such a thing like that. I've used this entry module. So we are going to learn about formation on Monday. So I think that is all about failed liquidity engineering.
okay, sir. Okay, okay.
So thank you, and I wish you a very, very good night and very, very nice weekend.
Same to you, sir. Have a nice weekend, and then we'll see you Monday.
Okay.
Thank you, sir.